In the energy quadrant, crude oil was up mildly. WTI is now up 8 of the last 9 sessions. It's actually down slightly versus its opening price, but up versus yesterday's close. As I mentioned, that up 8 of the last 9 sessions includes 3 days, the last 3 days, with 3 consecutive closes above the 50-day moving average in the WTI contract. So technically, we should now move up toward that 200-day, which is closer to $61. U.S.-Iranian tensions mount after more sanctions are imposed by the U.S. on Iran, including individual sanctions on the supreme religious leader of Iran, seen as an insult by the Iranian government. So Iran actually stated that negotiations are now out of the question. So there is no diplomacy left, according to Iran at least. President Trump still saying that he doesn't want war with Iran. He'd rather negotiate, but he'll do whatever he needs to do. So in terms of crude oil prices, it wasn't a big spike, but it certainly isn't a sell-off or any sort of long liquidation going on at all. It was low volume today as we await API figures tonight, EIA figures tomorrow, all expected to show draws. No real reason to take the longs off the table, at least given the overall situation. We're still awaiting OPEC's decision next week on whether they're going to extend the production cuts, OPEC plus, so OPEC plus 10 other oil producing nations that are not members of OPEC, led by Russia, are supposed to meet July 1st and 2nd. That meeting was already postponed twice, but given the tensions in Iran, it seems like an opportunity for those guys to actually push prices higher, which is what they've been trying to do and failing in the face of continually increasing U.S. production. 12.3 million barrels a day now on the 4-week average by the United States. And lastly, the Brent WTI spread has been widening after narrowing that last week, up over 4% over the last 2 days. It had settled above $9. It had gone as high as $10.74, settled about $7.72 today. That's a 30% decline in that spread, but it's really the widening that we've seen today since that 30% decline in that spread is really because Brent is accelerating, showing that there might be a little bit of validity to this tension in the Middle East, because Brent is Middle Eastern crude. So if there were going to be a shortage of something, if there's going to be a validation that the tensions were going to cause a shortage of supply, it would be Brent, wouldn't be WTI. Even though that spread would pull WTI with it, Brent should be leading. So the fact that the spread is widening gives, again, a little bit of credibility to perhaps the threats in the Middle East interrupting Brent's supply.